Hey guys, welcome back to my channel, Rinsing Money. My name is John, and in today's video, we'll be going over some key terms used in the stock market. We'll have a quick overview of my portfolio and move on to some news for the upcoming week. Throughout this video, I'll focus on 4 stocks in particular: Palantir, Big Bear AI, Nerdy, and Quantum Computing. All 4 of these stocks are reporting their earnings per share this week, and I would like to get you guys familiar with some terms. Before we get into those 4 stocks and their EPS reports, let's first get familiar with EPS, what it means, how it's calculated, and why it's important. Keep in mind, elections do make the stock market more volatile. However, when it comes to the stock market, volatility, at least to me, is not a bad thing. Always remember to buy low and sell high. Also, I have a quick tip on volatility. Volatility is measured by the VIX index. Easy way to do this is just type in VIX index into Google and you will see the volatility of the market for that day. This tool is often used when working with options, and it's something we'll get to learn as we progress with this channel. Let's start off with earnings per share, or the EPS of a company. What is EPS? So earnings per share is a company's net income divided by its outstanding shares of common stock. Net income is the income available to all shareholders after a company's costs and expenses are accounted for. Now, to the left of that definition, you'll find the formula used to find the earnings per share for a company. Now, I'm not going to sit here and pretend like I know how to calculate the EPS of a company. I'm terrible at math, and Robinhood, at the end of the day, will give you that little number on the EPS date. We're just getting familiar with terms, and I will, however, leave an example for anyone interested. I acquired this knowledge from Investopedia.com by simply typing in what is EPS. And this site has helped me out a lot in the past, and I'd recommend it to any beginner investor out there. See, the stock market and its terminology can get very confusing. And while I'm here, I would like to reiterate that I am in no way a professional at investing. I'm just an average guy, and this is also a learning experience for me. So with that all said and done, let's move on to why the EPS of a company is important. Right? When it's all said and done, the EPS is the bottom line of a firm's worth, right? The earning per share figure helps us, the investor, gain an idea of a company's financial performance while also demonstrating their stability as well as earnings trend over various quarters or years. So now that we've gotten familiar with EPS and we've become relatively familiar with the terms, I'd like to go through my portfolio. So this week I have 4 stocks that are reporting their EPS. We have Palantir, Big Bear AI, Nerdy, and Quantum Computing. So at the time of recording this video, Palantir had already released their earnings per share for this quarter, and if you go down to what that is, they actually, if I remember correctly, they beat their earnings per share. So we have an estimated earnings per share of 0.09 cents per share, and the actual was 10 cents per share. So they beat their earnings per share by 1 cent. I would like to dive into earnings per share, go through the reports, and see where that company's at, but that will most definitely be in a future video. All right. So last week, due to the election, I've seen a lot of volatility in my portfolio. So if we go to the 1 week graph right here. So all of last week, it's just been up and down, up and down. I think I peaked at 6,800. Lowest was 5,600. And a big part of that volatility is also the 10 credit spreads I have on SoundHound AI. It expires in 2026, so volatility with those contracts cause volatilities in my portfolio. But also, I ended in the red last week at 5,600. And usually when people look at their portfolio and they see red, they panic, right? I'm a bullish investor. When I see red, I there's just something in me that wants to buy more stocks, right? And this goes back to something we talked about in the beginning of this video: buy low, sell high. To me, red means that that stock is on sale pretty much, right? Especially if you believe in that company, you believe that they will increase their price, or the price per share will increase in the future. If you believe in that company, when you see red, you buy more. But that's just me. This is not financial advice by any means. But like I said, a lot of volatility due to the elections, and also earnings per share coming out. It's earnings per share season, I guess. Anyways, this week I added quantum computing. This is a new share in my portfolio. I added 10 shares of that, and I also added another 10 shares of Nerdy, just because it was down 10 cents. I was like, might as well add another 10 shares at what, 84 cents. That's less than $1. It's almost like $10. It's nothing. It's nothing to me. I don't mind you losing that money, because calculated risk. It's all about calculated risk. Nerdy, pretty cheap, and also quantum computing is at $1. It's just a little over $1, right? These are cheap stocks. I don't mind losing money on them, because I'm not going too big. I'm not putting my entire portfolio into that one stock. So that's pretty much the overview of my portfolio. I didn't add any more options, credit spread, because I'm out of money. So the goal this week and in this video, like I said, is to explain some key terms and to also give an overview of my portfolio for the week, right? As you can see, I haven't dived into any of what the stock is, or I haven't gotten into that yet, because as we go through the earnings per share of that company for this week, which will be 4 of them, I will get deeper into what the company does, how they operate, what the future might look like, if they're undervalued, overvalued. We'll get into all that good stuff as we go through the earnings per share reports. So I'd like to go through a couple of terms, as we end the overview of my portfolio. I'd like to go over what the bulls and the bears. You hear this stuff when investing a lot. The bulls and the bears. Who are they, right? So this little slide I have is going to explain that. So a bull is pretty much a bullish investor. And a bullish investor is an optimistic investor who believes that their investments will increase in the future. Whereas a bear, or a bearish investor, is a pessimistic investor who generally believes that their investment prices will fall in the future. So the terms bull and bear actually come from the image of a charging bull, which represents confidence and rising prices, versus a bear, which swipes its claws down and represents a downward market spiral. Now, despite these two sides, any good investor will tell you that you've got to be both, right? You got to be both a bull and a bear, depending on the market. So depending on the stock market, a good investor must know when to be bullish and when to be bearish. I'm a bullish investor, but if I had a portfolio back in 2020, well, I had a portfolio back in 2020, but if I had the portfolio I had now back in 2020 during COVID, I would have been bearish and sold high, at their peak. Buy low, sell high. Calculated risk. It's all calculated risk. So let's go back to 2020. Let's look at what the stock market was like during COVID, right? So I'm pull up my portfolio. Let's go to, let's see, American Airlines. So American Airline, they've been around for a while, and as we all know, airlines were hit really hard during COVID. So Right now, December, we're in 2020. Let's go all the way. Damn, it's almost been 5 years since COVID. So at their peak, right? Let's say January 3rd, 2020, American Airlines were at $27. This is where you see a lot of people sell off naturally. But if I had this stock at $28, I would have also been bearish and sold off. Now, American Airline is at $13, which to me is a steal, right? $13, it has about 15 more dollars to gain on the stock before it reaches its pre-COVID prices. And throughout the years, it's been high, low, high, low, high, low. But $13, I'm already up $53 on the stocks, 20% pretty much. So I'm bullish on the stock now, but back in 2020, I would have been bearish. So that's pretty much the example of bulls versus bears and how any good investor would want to be both. So now that we've explained what an earnings per share is, the terms bull and bear, what they mean, I'd like to end this video. I'd like to keep this one short, get people familiar with the terms used in the stock market, and for future videos, which will be coming out this week, I'd like to get into the earnings per share of the 4 stocks I've mentioned, starting off with Palantir and moving onwards. I'll explain what the company does, why I'm invested in them, why other investors are invested in them, and just look at the earnings per share reports. I'd like to thank you guys for watching. If you have any questions, just leave it down in the comment, and I'll try and answer them in the upcoming videos. Like and subscribe, but that'll be all for now, and see you guys in the next video.